Okay, well, by my clock, it is 5:30 p.m. sharp here on the West Coast and 8:30 on the East Coast. So we're going to go ahead and get started. Just one final quick check. Make sure everybody can hear me. See my screen okay? Is it good and clear? Everything a go? Maybe just type in Y. All right, great. Good. Good. Okay, I am Dean Jenkins, and I'm the founder of FollowMeTrades.com, and I've been very successful as a trader, and I just love these kind of events. I'm looking forward to this. I've been looking forward to it all day. I love talking about trading, and I love talking to traders, and I hope you guys make it interactive, that you ask lots of questions, make comments. That just makes it better for you and for me. So I'm just looking forward to it. So tonight I'm going to share with you my trading secrets, my secrets to trading success. And this is good stuff. I really like it. And I hope you do too. Hope you find it really, really useful and profitable. So as always, a disclaimer. So this material is being presented for information and education only. I am not a financial advisor. I don't know your circumstances, and I'm going to show some specific trades, but I'm not making a recommendation that you take it. I'm showing you what I'm doing, and you have to make your own decisions, and you know your risk level. I don't. So good. So tonight, what I'm going to cover, I'm going to walk through three major areas here. I'm going to talk about how I scan. I get asked that a lot. How do I scan and find the best of the best trade setups? Then I'm going to talk about how I find the high potential winning trades. I'm going to give you my exact setups, and then how I manage trades once I'm in them. I'm going to go through this material pretty fast. You guys are smart, you'll get it. And I'm also going to, in the chat area right now, I'm going to post a link there. Give me a couple Y's if you guys can see that link. You can download a PDF of this presentation, so if you want to look over it later, like I said, I'll go through it pretty fast. So everything that I'm going to show tonight is going to be in that presentation. Yes, good, thank you. And it will be recorded, and I will send out a recording of this, assuming the technology works. I am recording. We'll render it and send it out tonight. So let's talk about the basic tools I use first. This is important. So I use three key things in my analysis of stock charts. And you know, I've tried all kinds of indicators and all kinds of different trading software packages. My first couple of years getting into trading, I can't imagine. I didn't like to think about how much time and how much money I spent on systems, but I've really dialed it down to some pretty simple stuff. I use Dow theory and Elliott wave theory together, and with Elliott wave theory, I use Fibonacci retracements and extensions. And I could use just those two things, and I could trade without any commercial indicators. Those tools you can do that analysis with what comes with every trading package, every trading platform. But I also use the applied reality trading software from traderscoach.com. I've just found it to be really good. You know, I compare that to like flying an airplane. I could do it without any indicators, but that would be like, you know, flying by visual flight rules. And when I bring the software in, it just helps me. It's like having, you know, instruments to fly in times when it gets a little foggy. So that's what I use. And let's talk about Dow theory. So here's a really simplified version of it, but this is really all I need. So Dow theory, you know, Dow is the guy who back in the 30s started, you know, he was Dow, and with Jones, I guess, started the Dow Jones. And he wrote this theory on the market. And one of the things he said was, very simply, you know, when you hear this, it's almost so obvious, right? But an uptrend is a series of higher highs, higher lows, higher highs, higher lows. And that's a bullish trend, and it's intact, and it's continuing until this pattern gets broken. And a bearish trend down is lower lows, lower highs, lower lows, lower highs, until that pattern gets broken. That's important to know, actually. And you can see when the pattern gets broken, there's a good chance that the trend is changing. So we've had, you know, this bullish trend, you know, higher highs, higher lows, higher highs, higher lows. And all of a sudden we put in a lower high, and then we put in a lower low, right? We took out the previous low. That's a strong signal that this trend may be changing. And then, you know, the downtrend, a bearish trend, right? Lower highs, lower lows, lower highs, lower lows. We put in a higher low, and then we go put in a high, take out the previous high. That's, again, strong evidence that the trend is changing. So I use that a lot. You'll see it on some live charts here. Elliott wave, Some people don't like Elliott wave. Some people love it. I like it. What I think people don't like about it is that often Ellioticians argue about wave counts and all that kind of stuff. I keep it really simple. My mentor, the guy that taught me Elliott wave, is Bennett McDowell of traderscoach.com. And he and our wave counts are always exactly the same, almost to the tick. In fact, he just released a new book. It's on Amazon called Elliott Wave Simplified. And he let me write a chapter in it. And so go to Amazon and check that out. There's a plug for Bennett's book. It's really, really good stuff. And I've coached and mentored several students, and they are able to label their waves and counts exactly the same way I do. So I think we just use a really simple method. And Elliott wave says that the market moves in a series of impulsive and corrective waves, that the market moves from pessimism to optimism, back and forth, in a series of waves that you can see on the stock charts. So that's helpful. I use Fibonacci numbers as a part of Elliott wave. So Fibonacci numbers they're super special, important numbers, and they're almost magical. So here's the Fibonacci number sequence, and the way you get the next number in the sequence, like this 5, it's the previous 2 added together. So 3 and 2 equals 5, 3 and 5 equals 8, and so on. That gives you the Fibonacci sequence. And then Fibonacci ratios are the ratio of specific number positions to other numbers in the sequence. And you can read about that there. But and you get these ratios. And this level here is called the golden ratio, 0.6180. And you can see this diagram. So snail shells, say that fast, their curve expands at that golden ratio. And so do the flower petals often, pine cone scales, pineapple scales, pine cones, spiral galaxies, hurricanes. Lots of complex systems follow a Fibonacci golden ratio or Fibonacci sequence. And the stock market, the markets in general, are definitely complex systems. And it's just, it never ceases to amaze me how often the market does important things at Fibonacci levels. So how do we use this? The first thing we use is what's called a Fibonacci retracement. So here we've got an initial wave up, just a big impulsive move, big strong move on a chart. And when we get evidence that it's turning down, then there's just a high probability that it's going to retrace down into a Fibonacci level. I've got them here in green. It's 38.2 to 61.8. That's a corrective wave down. Okay, and if it does that, if it corrects down into a Fibonacci level, and then we see evidence based on Dow theory that it's going back up, we can expect it to extend. We use Fibonacci extension levels, and we can expect it to extend up to 61.8 to 100%. So that gives us a really clear target zone on a chart. If all these other rules are met, and I'm going to go over the rules, then we got a high probability that it's going to extend into a target zone. And it's really nice when you're making trades to have a clear target zone, isn't it? And please ask questions as we go along. Just type them in there. I'm keeping an eye on the questions panel, and I'm happy to field them as we go. So Elliott and Dow really can go hand in hand very nicely. You notice on the chart here, right, this big top one, which is, the Elliott wave, 5-wave sequence, right? But there's, stock doesn't move like that. Things don't go in straight lines. It goes like this down here. And we can see these sequences of higher highs, higher lows being played out. We can see when the trend is going to change down into a corrective wave, and then when it heads back into another impulsive wave. So it's really nice to use those together, and I do that a lot. So the last thing I talked about, I use the applied reality trading software from traderscoach.com. Again, not essential, but every edge I can get, I want, for sure. And you can see these are the only indicators I have on my chart, this and then Fibonacci lines. I'm going to show you my charts in a little bit here. I keep it really, really clean, really, really simple, and follow what I'm teaching you here. But the applied reality system, it's got a precision trend filter, and it's really just, it's either green or red or yellow. And green means there was enough momentum to predict more highs. Yellow, it's not predicting anything. It's neutral. And red, at some point there was a down move that triggered it to call for more lows, and that's probably off the screen here. And you probably heard that. That is the applied reality system, you know, when a indicator just fired, because I got my charts going because I'm going to show them to you. So precision trend filter, the optimum wave locator is an oscillator. It helps with Elliott wave count, and it just shows the momentum of particular areas of the chart. And then these pyramid trading points, they call out very special higher high, higher low, or lower low, lower high sequences where the ratio of the move, the impulsive move, is greater than, you know, the momentum of the corrective move. So those give us really, really important support and resistance levels. And then there's reversal bars, which show key reversal areas, and I use those for scaling out and taking profit. So that's the applied reality system. George is asking, hey, Dean, what time frame do you use these indicators? Yeah, they work on any time frame, George. I'm showing you a daily chart here, but you can use them on, you know, intraday time frames, tick charts, range charts. They work good really no matter what you're going to do. And I'm going to show you a couple, some live charts where we're looking at daily and intraday and all that stuff. So any time frame. People often ask me, what's the best time frame to trade? And I say that, you know, kind of tongue-in-cheek, but it's true. The one that gives you the best setups, right? There's no point sitting there staring at a chart and trying to stare a pattern and a setup onto a chart when it's just not there. Go look at something else, man, and go change the time frame. All right, so putting it all into play here. This is an older chart. This is from last summer, but I worked really hard building this slide out, and the principles are unchanged. And I will show you live current charts of the S&P 500, a couple trades we're in, and some intraday charts from today, from gold and oil today. So this is really just showing the principles here. But on last July, using the exact analysis tools that I'm showing you right here, I saw a bearish pattern forming on the Dow and the S&P 500, and I posted that on YouTube. You know, if you want to go look and check it out, download the PDF. But what I saw here was, you know, we had been in a channel. You know, last year was miserable. From March all the way up until the beginning of July, we've been in a channel, and I said, oh, look, the channel broke. Well, that's interesting. And I saw lower low, lower high, did not go up, put in a new high, and that channel break was a new low, lower low. Okay, that's interesting. And I said, this high has to hold. If we go up, take this high out, then we don't have this sequence going on. But if we turn around and go take out this low, then I think this bear market's starting. And boom, new low, right? The high held, did not go above it. The low was taken out. And anybody remember what happened next? What's the next chart look like? The next screen look like here? Yeah, boom. There it went. Okay. And because we saw this coming, because we saw this pattern forming, we were able to go scan for and find some great trades that were going to go down with it. And so I published, here's some of the, you know, I run a stock picking service, and here's some trades that I published to my subscribers when I saw that happen. This was Ingersoll Rand, and we went short on July 27th. And isn't it cool when you go short and the next day it just gaps down massively and then continues on down? Doesn't always happen that way, but that's a fun one to show. And we made some really, really nice profit on that. We went short. I like trading shorts with put option contracts, but you know, you can do that whatever you want. But that was IR. Goldman Sachs, we went short on August 11th. We saw, again, that pattern I just talked about. At a new low, we put it in. Of course, it dropped like a rock, too. And we made some really nice profit on that. So those are just some examples. And, again, I'll show some live charts in a little while here. So let's talk about scanning. So, you know, to be in good trades, you got to go find good trades, right? And we don't want to 6,000 stocks in the U.S. stock market, and who knows how many ETFs and futures and stuff. Man, you got to have a way to narrow that down. So here's three things I do as part of my scanning. Is I want to know what the overall market trend is. Are we bullish? Are we bearish? Are we stuck in a channel? What are we doing? And then I want to look for sectors that are participating in the trend or counter trend. And then I start scanning and looking within the sector for the exact price pattern setups that I trade with. So this is a way to narrow it down. And I'm going to show you an example of one from last summer here. So this was before that big move down that I talked about. This was back in June, right? Here we are in this awful channel, really hard to make money in. And, at that point, the S&P 500, it was down a couple points. The conclusion, yeah, it's stuck in a channel. It's miserable, right? So I'm going to go look for sectors that are doing something different. Right? I don't want to go find stocks that are moving with the S&P 500 in its channel. I want to find something that's moving, right? So here's, there's several ways to go look at sectors. This is iShares. It's a good way. And it's like I looked at it back in June and said, wow, look at this. Biotech, healthcare, pharmaceuticals. Okay, look at this big sector that when the market was channeling was down a couple points, this thing's up year to date, 21, 20, 15, 10. So, here's an interesting sector to go look at. You can go look at Morningstar. S&P's got its sector breakout. So there's lots of ways to look at sectors. So I'm going to go look at charts within the pattern. And I only have two setups that I trade with. There's a channel breakout, which is where new trends come, bullish or bearish, and an Elliott wave 5, which is a trend continuation, right? Wave 1, 2, 3, 4 have already done their thing. All I want is the trend continuation with wave 5. So two setups is enough. I can find plenty of trades with that. So here's I can look at a chart like this and in about 3 seconds go, that's worth analyzing, because I'm looking for a wave 5 trade, and I see a wave 3 up, a 4 down, and the beginning of a 5. That's all it's that simple. You'll over time you begin to recognize that shape almost instantly when you see it. So look at it. This is worth analyzing because it's in the sector I'm looking at. It's with the sector trend, and there's a pattern that I'm interested in. So I got to go measure it and figure out if it's a good trade or not. But it just gets my attention real quickly. So now I analyze the thing. I want to identify the highest potential winning trades. And what I'm looking for is a high probability of winning, of course. Not all trades win, but I want the highest probability possible. Got a whole nother presentation on risk control that's really important. I'm just going to check once in a while. Audio is still good? Everybody can hear me? I did one of these one time, and I talked for half an hour, and the internet connection had dropped. I think I would know that, but everything's good. Okay, great. All right. So I want a high probability of winning. I want clear support and resistance for risk management, and I want a high reward to risk ratio. I want to have the chance to make more money than I lose if I'm wrong, if the thing fails. All that seems pretty reasonable, huh? So here's this. This is MRGE, Merge Healthcare, and which was a pattern I saw. I showed you the chart, and I've labeled it here. There's an Elliott wave 2. There's a 3. There's a 4 right down into my Fibonacci retracement zone, and I've got a wave 5 target zone. But it's not proven that wave 5 is starting yet. Remember Dow theory, right? I want to see a higher high, a pullback, and a new high. So we got that new high right there. And what I want to see is that lower high and then a higher high. That's going to tell me that this next wave, that this downtrend of the corrective wave has ended and a new one truly has started. Okay, so I got it. Right, here's a chart. There was that move up. Here's the pullback, new high. So that gives me all the data I need now to really analyze this trade finally and make sure it makes sense. So I've got an entry level. It's at this new high, $5. I've got a stop level under that low, that previous low, because that was, that's kind of how it moves in Dow, right? Lower low, lower high. The next pull down should be a lower high, right? Because this thing is proven it's moving up. So I got to stop at 444, and I've got a target using my Fibonacci extensions up here at 664. So I use very conservative, right? I said the extension zone is 61.8 to 100%. I always use the bottom to be conservative, right? I don't want to, I want to know that even in the most conservative case, it's still going to be a good profitable trade. And then I look for a high reward to risk ratio. So the math here, again, if you download the PDF, you can study this. But I calculate the risk per share. And that's the entry minus the stop. In this case, $5 minus 444. Risk per stop is 56 cents per share. What's the reward per share? Well, it's that low target minus my entry, and it says that my potential reward if I hit the target is $1.64. And the reward to risk ratio then is the two of those divided, and it gives me a reward to risk ratio of 2.93. So if I'm wrong and the trade just stops out, and I always trade with stops, and whether that is an actual stop loss order on the chart, or some people don't like to do that, that's fine, or whether it's just an alert and when it happens you go take the trade, get out, doesn't matter. But if I hit the stop, if I'm wrong, no trading system's perfect. You can't win every trade. Over time, over the last about 4 years, I've been right 70% of the time. And since I'm always trading with a high reward to risk, my winners are bigger than my losers. So if I'm right 70% of the time, my winners are bigger than my losers. That equals profitability pretty consistently. Okay. So if I'm wrong, I'm going to lose 56 cents. If I'm right, at the lowest case, I'm going to make $1.64, almost 3 times more. That works for me. That's a go, right? At the low target, the profit on this trade is 33%. At the high end, it's 63%. So this rocks. This is a good trade. And by the way, I took it. So how do I manage trades? So I'll get in. There's my entry at $5 at this blue line. When it's up into profit and then it reverses, I'm going to scale out. I take a third of it off, because these, anything can happen. Bad news can come out, whatever. So this thing gapped up into some good news. I took a third of the position off. Lock in some profit, reduce some risk. And then it really gapped up, you can see here, and it went totally flat. Now this is a super unusual stock pattern, and it usually means something super unusual is going on. What was going on here was on this day, IBM announced that they were going to acquire Merge for about $7.10. Well, it's not going any higher than that for a while, and if the deal falls through, it could tank. So I think that's a good idea to exit, take our profit. We made 34% profit 4 weeks on that trade. And that's pretty, I'm in most trades 4 to 6 weeks on daily charts, and that's a pretty typical kind of setup we're using. In terms of managing the trade, this is that one was, a bit unusual. So the rule I use is, in an up trade, it's higher highs, higher lows, higher highs, higher lows. I just scale my stop. If my entry's down here, I wait for a new high to be put in, and then I trail my stop. Once a new high is put in here, I would trail my stop to the previous low. When a new stop's put in here, I trail my stop to the previous high. So these are key support levels, right? These higher lows are key support levels once a new high is put in. So I just keep trailing my stop in. I don't want to get out too soon. I will take profit. I will scale out a third at reversals. I'll scale out another third. But I really want to stay with the trend until it's proven to be over. Now, you can't catch the absolute tops or bottoms in short trades. I don't know how, I don't think you can consistently absolutely catch the tick at the very top. But what you don't want to do is, at any one of these, on the way, these look like big reversals, right? We don't want to just jump out. Look how much profit we would have missed. So I keep at least a third of the position on until Dow theory says lower low, lower high, new low. Okay, trend's changing. That's my stop. We're out. Okay. Hope that makes sense. And then this point, I never enter a trade without having a clear, predetermined plan for how to manage it. Because that way you take a lot of the emotion, the fear, the greed, whatever the emotion is, out of the equation. Because if you're in the trade and you're trying to decide, should I take my profit now? Is it going to go up? Am I going to get my profit back? It just clouds your judgment. So to have a predetermined trading plan going in and then just execute that with discipline, that's what's really helped make me successful, for sure. So I said I primarily look for 2 setups, a channel breakout and a new trend, right? That's where new trends come from, is out of channels quite often. That's where Elliott Wave 3 start, and they're the biggest, most exciting waves. And then Elliott Wave 5, that's the highest probability trade, right? Because you got 4 waves before that have all done their thing and fallen into a known pattern, and so the final 20%, 5th wave has a high chance of making it, right? Elliott Wave 5 is the easiest to spot and has the higher probability. So I have simple criteria for Elliott Wave 5. I got to see a Wave 3. It's easy to spot. It's the biggest price move. I got to see a 1 and 2 before that. There's a simple rule. Wave 2 cannot retrace below Wave 1 start on a bullish trend. I'll show you on a chart. Wave 4 retraces to Fibonacci levels. Wave 5 proves that it's begun. Dow theory. So here's intraday. This is a E-mini 2-minute chart. This is from back in September. So here we are. It's channeling, right? I'm on the West Coast, so the market opens here at 6:30, right? Here we are at 8:30, a couple hours in, and it's just sitting here channeling, miserable. And look at that, it broke out. Now, my breakout setup would have caught this one, right? But I'm really showing the wave 5 setup here. So breaks out into a clear wave 5, into a clear wave 3, right? Here's my criteria. I got to see a wave 3. I got to see a wave 1 and 2. Well, I've drawn them in here, right? It's just, you know, this whole up move started somewhere. What was the last low? Last low's here, okay? Here's the up move. Where's the last low before it started? Right there, okay? Wave 1's the first move up. Wave 2 is the first counter trend move that does not go below that low. 1, 2, right? 3. It's pretty easy. Okay, I got to see wave 4 retrace to my Fibonacci levels. Well, there it did. Right down 38.2 to 61.8. I got these blue lines. Perfect. Retrace right into my Fibonacci zone. Now I got to see wave 5 proven that it's going to start. Right? There it is. Right? Up, down without a new low and a new high. Right? Lower high, higher low, new high. There's my entry. Entry long at 1940. And there it goes. I got target, my target zones, 61.8 to 100%. And got my initial stop down here. I trail my stops up to lower highs as new higher highs are put in. I scale out as it crosses a Fibonacci line. At this point, it made a new high there. And then here it is, you know, the market's getting ready to close at 1 o'clock Pacific time. This is a day trade. I don't want to be in it, you know, overnight. So go ahead and close the trade out. And that, this was an actual trade I took, one of my presentations I did before, and it was just the day before. So I don't have to go hunting for charts. And I'll show you there's 2 trades today on oil and gold. We'll do the same analysis, okay? But $1,300 profit on 3 contracts of ES in a couple hours. So, you know, doesn't always work out. Don't always get great trends like these, but you do quite a bit. Yes, Sydney. Stop is trailed to the new higher low. Covered that a couple slides ago. And you can download the PDF. The link is in the chat area if you want to download it and study that. Okay, I've covered how I scan, how I identify my highest potential winning trades, my trade setups that I look for, and how I manage trades. So let's look at some live charts now. And we're looking pretty good on time. I was hoping I would be able to get through the material pretty quickly, and I did. So I'm going to show a couple of the SP 500. I'm going to show a couple trades we're in. I'm going to show some futures charts. If you would like me to analyze your picks, your stocks, be happy to do that. I'll take a couple. So if you're thinking about that, have those ready. Okay. So check out the S&P 500 here. Last summer, remember I showed at the beginning, we saw this pattern coming, right? This lower low, lower high, new low, and we were able to go short on this big move here. Look at the same thing happened at the end of last year and first part of January this year, right? We had this pretty amazing move up last year, and then it turned back down. You can see that the overall trend is still down, right? I didn't go put in new highs. But, you know, lower low, lower high, lower low. I said at that point, I did another YouTube video, hey, guys, it's going down. It pulled up a little bit, but then kablam, and we were short Caterpillar, Apple, Abbott Labs, a bunch of other ones. We got the year off to a really nice start. I know some of my subscribers are on here. Cool. Can you tell us where the link for the PDF is? You bet, man. Let me. There's a chat area in your GoToWebinar console. There's a little area called chat. I just posted it again. Okay. Let me know if you guys can see that. Okay. There you go. Good. Good. Yeah, so you can download the PDF. All right. So we caught a really nice downtrend here. Now we've had this pull up here. There's another thing. I don't use this a lot, but I follow some other technical analysts who look for symmetry in the market, and some of their work fascinates me. So this move right here is symmetrical with this move here. It is identical, like within a few ticks, both in time and in price. So the price from the bottom of this to the top of this is within a few points of the bottom of this to the top of this, and they are both 25 days long. So that's interesting. Now I have a bearish outlook on the market. I hope the chart loads and reloads here. Taking a risk doing this live. Okay. We were in a 6-year bull run. Look at this, lower low, lower high, lower low. I think we're heading down into Fibonacci levels, one of these levels here. This is probably the right one, 1575 to 1227 over the long term on the S&P 500. Okay, I think this correction, and this would be, what's the biggest, strongest move on the page? Well, it's this right here. It's all wave 3. This is the beginning of wave 4. I see evidence of it. It may take through 2016, maybe even longer, but I think we're heading down to these levels. Okay, so that's the S&P 500. And if you look, we've had this pretty strong rally here for 25 days. It looks like it's losing steam, so it won't be surprising to see this now. Now, remember, do we have proof yet it is turned around, right? One price bar does not give us proof. We want a lower low, lower high, new low. If it does that, go looking for your shorts, man. It's coming. Go looking for your short trades. I think it's coming, and I will be taking short trades and publishing them. Gold. What about gold? So here's the gold futures chart on a daily chart. So look at this pattern here. So this thing, bear move, pretty much the whole time that the equity market was going up. Gold and equities are roughly reversely correlated. So big bear move, right? Wasn't clean. It's pretty jaggedy. But then it put in this nice channel at the bottom, higher high, higher low. And about 5 weeks ago, I said, hey, if we put in a new high, if we take out 1113, and I got some of my subscribers on here, it's true, and it's on my YouTube channel, right? I'm not making this up. I said, if it breaks through 1113, it's on its way. Well, boom, look at it. It's awesome, right? That's a nice move. And because we saw that coming, we were ready. Remember, scan, what's the trend? Then go look in a sector. So we're in this trade right now, gold mining stock. Because if gold's going to go up 30%, over the next year or two, there's going to be some other trades that are going to do a lot better. So here's a gold mining stock, massive downtrend. This is a pretty inexpensive stock. This is MUX, McEwen Mining. And so I said about the same time gold's breaking, I go again, this high, come out of this channel with a new high, higher low, I go, boy, if it breaks this line, $1.25, that's our entry point. We're going to get in. And we did. We got in. We've scaled out twice at these reversals. Our stop is now up here at 167. So if we get stopped out now, we're only going to make about 40% on this trade. Only. And who knows? We're waiting for the trend to tell us what's going on. Now, gold had a tough day today. But, look how much it moved up. If you think back to the gold chart, of course a retracement's normal and expected before it heads on up, right? And this may go down, may stop us out, or it may reverse on up to new levels. And if it does, we'll be trailing our stop up to the previous lows, and we'll just stay with it. So we were in a handful of these gold stocks, and they did really, really, really well. Really happy with them. I wanted to look at oil here as well before I start taking your picks. So I'll blow this up a little bit. Everybody knows where oil came from, right? Summer of 14, it was at $140 a barrel. Last month, it got down below $30 a barrel. That's awesome. We are enjoying that at the gas pump. And look at this, as it put in this bottom, right? Because we had this massive sequence, lower lows, lower highs, lower lows, lower highs, lower lows. Pattern's broken. And I said, if it breaks through 3709, I said this about 3 weeks ago, if it breaks through 3709, it's on. And I said if you're a little skeptical, then let it break through 39.03. Well, it's done both. Yeah, it dropped about 4% today, but that's, price does not move in straight lines. Higher highs, higher lows, higher highs. So that's totally expected. So this level 37.09, where I said that was a resistance level for oil to break through, that has now become support, right? So as long as it stays above this previous low here and then reverses on up, this uptrend is intact, and oil can go up to, if we jump to a weekly chart, right? So this is obviously a wave 3. Again, it's not hard to spot. Biggest, strongest move on the page, right? A retracement is going to take us up 62.97 to 84.87 before it heads back down for new lows. That's what the technical analysis shows. Bad news if you're driving an SUV, but you trade this right and you can go buy a brand new car. So that's that. I'm looking at Judy's asking, what kind of channels do you use? I'm not sure what you mean, Judy. I just look for an area where price has consolidated and did not move out of. I sometimes use, I'll just use lines to draw a channel. Let me find an example here. Right. Is this gold? Nope, this is crude. That's why it didn't look right. So I would just use some horizontal lines to define a channel that price seems to be moving within in a pretty narrow range. Here's the channel that gold sat in before it broke out. So that's all I do, Judy, is just draw some lines. Hope that I don't need an indicator for that, right? I can see it. Dan, talking about gold tonight and lower lows. Okay, recording. I don't know, man. Telepathy. I hope I got that right. Yeah, you bet. I am going to send a recording to everybody that registered, so you're going to get it. Where does wave 1, Jerry's asking, where's wave 1 after a channel breakout? It's a good question, Jerry. We don't know that it's wave 1 until this impulsive wave begins. We don't know it's wave 1 until impulsive wave begins. So you really can't spot wave 1 and 2 until wave 3 gets going. But in this case, I'll draw it real quick. We got a little time here. We're doing good. I'll just draw it for you. Text. There we go. So here's one. This is the first initial move, right? That's the first impulsive move out of that channel. So that's one. Here's two. It's the move down that does not go down below that next that previous low. It's got to stay above that. Can't go. It can be equal, but it can't go lower. So there's one. There's 1, 2, and this is obviously 3. So hope that helped you, Jerry. What's the timing on oil to get back to 84? Yeah, Scott, I don't know the timing, man. It's going to take a while. Right? It won't happen overnight. But I will not be surprised if you look at this gold pattern. If you look at this gold pattern, right, it took a while, but once it broke big time. And I think oil may be doing something like that. Now, along the way, there are pullbacks. They don't go straight up, but oil could explode. You see things in the news about the producers starting to agree to freeze production and stuff. I watch the news. I like the news. I pay attention. The news can draw my attention to different markets or to different stocks or commodities. And news can even set an expectation for me. But I don't trade on expectation. I trade on the realities of the chart like I'm showing you in front of me. That's, the only reality in the market is price and volume. Everything else is opinion. So Jerry's saying you thought wave 3 is supposed to be the largest wave. Yes, that is absolutely correct. So why trade wave 5? Well, I do both. So in this case, we're trading wave 3, Jerry, on gold, right? I call it a channel breakout. I said wave 3 can come out of these channel breakouts, and it did in this case. And I would prefer to catch those. But so I have two setups, a channel breakout, trying to catch a wave 3, and then I have a channel 5. Channel 5 is easier to spot and has a higher probability. Okay, you can get channel breakouts that do a little bit, but they never go up into a 3. Okay. Do you expect oil to be a new low after, you know, that high of 84? That's what the chart says. If we go back to oil, right, put it back on the weekly chart. So this is clearly a wave 3, unmistakable wave 3. So if we get a wave 4, which it looks like it started, I showed you in the daily chart the pattern, it really does look like it started. So, you know, you say 84 the low end. If I were doing risk to reward, I'd be using the 62.97 number. I'm conservative about that. I want the profitability to be good at the worst case, not at the best case. Okay. But if it gets up into this wave 4 range and then proves that it's heading back down, and let's just use this midpoint as a guess. Okay. If we say oil recovers up to 73.92, then where's it going down to? Well, look here. Here's wave 1, 2. So now we just take our Fibonacci extensions and go wave 2 to 3 up. We'll just estimate the recovery up here at the midpoint. And that says that the range then for oil is to get below 1939. Ignore the negative number, right? To get below 20 bucks. That would be the expected range for oil after it goes up. But these things all have to be proven. None of this is proven yet, okay? Mike's saying stock or ETF that follows oil. Well, we're USOs and ETF that follows oil pretty much in lockstep. I think the price is the pricing's different, but the pattern is exactly the same. All right, back to the daily chart. How do you draw the fib lines backwards? While he's asking, I don't think I am drawing. I don't understand the question, right? The fib tool is different, a little bit different on every platform, but a Fibonacci retracement goes from wave 2 to wave 3, and a Fibonacci extension goes from 2 to 3 to 4, the extremes of that. Mike's asking, is Iran supply affecting the market yet? I don't know, right? I don't know. I'm sure the market is watching that. We're watching that. But, you know, I can speculate on that all day long. What I do know is we have a very clear technical pattern showing that oil is coming off its bottom and that a new corrective trend is underway, and I'm trading that. That I can verify. That's reality. Sometimes I may never know why a particular move happened. Right? It's not that I do go look for big news items, and if I'm going to trade a stock, I don't want to take a trade into a company that says, yeah, we might be going bankrupt, or if there's a merger deal on the table that has not yet been announced, or a big disruptive news. I don't want to take a trade into that. But other than that, you know, I want to know when the earnings are coming out, and I expect some volatility, and I might manage a trade around that. But I have a business degree. I know how to do fundamental analysis. I did it for years. I never found that it helped my trading. I'm a technical trader. I trade based on the realities of the chart, and it has served me really, really well. Okay. Where do I start? Dennis is asking, where do I start my fib retracement? So we'll do it. This is oil, weekly, daily. Let's do it again on the weekly. Real quick. So again, this is wave 3, super obvious. And by the way, the software I talked about, art software, is helping me. The magnitude of the oscillator here is the deepest. This is the big move. So you could argue whether is this wave 1, 2, or is this wave 1, 2. Ultimately, it doesn't matter. It doesn't matter. They're nearly at the same level. So I'll just use this one. So this was before this trend happened. It was kind of channeling. This was the first move down before the big move. It pulled up, did not go take out this high, so it stayed below this high. So that's 1, 2, 3. Okay, so my extension lines, I'll just draw them again. I might be a tick or two off, but it's okay. I grab my fib retracement tool, and I go to, remember I said 1, 2. I go from the top of 2, bottom of 3. I just click each time. That's how TradeStation works. Click. I think I got really, really close. And that gives me my retracement zone. So that's how it works. All right. I don't trade Forex G. I analyze Forex charts. Forex charts look the same. right? And again, this analysis works on any time frame. Okay. So anybody got? I could take a couple symbols. Anybody's got some stock or futures they'd like me to look at? I'd be happy to analyze that real quick. If you throw up a symbol there, put it in caps so I can see it. Sydney wants to see. Okay, Kurt wants MOS. I think you asked before, Kurt, about MOS. Let's do that. MOS. So here's the deal on analyzing your charts. I'm not an advisor. This is on weekly. I don't know your situation. I'm not recommending. I'm telling you what I would do or not do. So you can hear my my stuff going off here. Okay, and so I'm not making a specific recommendation. Don't know your situation, and don't be offended if I don't like your pick. All right. So MOS, Kurt. Here we go. So MOS, you can see I've labeled this before. I've watched this. This is clearly wave 3. All of this here. This was not 4. It did not go up high enough. So this is wave 3, and we're waiting for it to get up into 38.2 to 61.8. And then after that, then it proves it would be going down. We would be going short on this. Now this move right here, it has done a lower low, lower high, and a new low. So this could continue down at this point, and this could be still part of wave 3 because the wave 4 hasn't happened yet. Our oscillator's positive based on this last move up, and that gives me a bit of pause. But you could go into this, and it could go make new lows. It doesn't meet my rules, but if I were to go into it, I would put my stop here at 30.30 and be short just below this pyramid here, about 27.93, and watch it really close. But not the best setup for me, but you know, clearly in a downtrend. So MOS. Let me go in order here. Be fair. I'm not going to get to all these. Sydney wants to look at Citigroup. I have looked at Citigroup. Citigroup's one of the things that drove me to become a technical trader. And I made a ton of money. I made a great trade, but I was so stressed out because I never knew I didn't know where to get out. So this is really clearly messy. It's messy, and you know, no surprise. It's in a downtrend. This is really wave 3. So this would be a big wave 1, 2. So let's just measure that. Wave 2 to 3. So it is just now entered into the wave 4 retracement zone. So we would expect it could go clear up, you know, clear up here to 48.12 or something, somewhere in here. We're looking for it to eventually reverse and head back down, and it could go from now, could go from this point here. So if we make that assumption that it reverses from here and heads down, then the wave 5 targets are down here, 30.08 to 21. But it hasn't proven that yet. It's got to do a lower low, lower high, lower low. We like to see the oscillator go negative. So Citigroup, bearish trend. When wave 5 starts, it could be a good one. But it's not there yet. Hasn't proven it. WTW, Stapleton. Let's look at WTW. Well, there's the Oprah effect. This is Weight Watchers. So the Oprah effect is a really clear wave 3. And where did it start? Here's the low. This was the first move up, pulled back, say to here. So 1, 2. So we're going to go from here to here. There's wave 3. Wave 4 broke my rules. It went too deep. Okay. I like it to be in this perfect 61.8 to 38.2 zone. It can exceed that, but it can't go below 76.4, and it did. So that tells me this pattern is out of spec, right? And there's plenty of good charts to go trade where I don't have to break my rules, so I don't. So this one, you know, if it had retraced into this expected zone and headed back up, could have been a good long, but it's off the table for me. And yeah, so that's the deal with Weight Watchers. Apple. We caught this down move on Apple here, and that was awesome. You can see I had my Fibonacci lines on here. See my 61.8 to 100 target zone, right into the target zone, man. And I had it labeled wave 5. How cool is that? So what happens after wave 5? People ask that a lot. The typical thing is A, B, C. So, sorry, that was wave 5. So A up, B down, C up. The ABC is opposite this trend, which was bearish. So probably expect a pullback here and then another move up, and at some point a new sequence to begin. So if I would be neutral on Apple right now. I would not be going into it. We had an amazing short here. We made a lot of money. Now it's it's heading up, but the rest of the market's heading up. It's just not clear to me now. So when it's not clear, I don't force it. I go look for one that is. But that's the deal with Apple. XLT, that's an ETF, isn't it? Is that the energy? No. What? XLT? Oh, you meant TLT, right? Are you the one? Yeah, TLT. TLT is like a net bond ETF or something. Yeah, 20-year treasury. Okay. So this is interesting. So pretty messy back here. This is all what we call a complex correction. There was no real clear trend, big move, but we had a big, huge move up, but it corrected almost 100%. Now we have an uptrend here. We do have an uptrend, and this is wave 3. The amplitude of that move is the biggest. The trouble is finding, so we would actually call wave, this would be 1, 2 right here. So 1, 2, and this is 3 up here. It's not, it's messy, okay? Now we're expecting wave 4 to retrace down here to covered up 127 to 122 before it actually did make it into the zone just a little bit, right? We got negative oscillator. So it could come down more, or it could reverse and head up into 5. Again, we want to see proof that it would head up, pull back without a new low, and then go put in a new high. So if this is the bottom of 4, then what would the target be? And that would be here to here to here. Pretty high target. It's not there yet. It's got to prove that, but 139 would be the low target on that, but not yet. All right, we got a few minutes left. Thanks for playing along. That was cool. Yeah, I want to get back to my presentation. So I got a couple ideas for you. So we looked at some charts. So here's some suggested next steps, right? I've given you a lot of information. You can download the PDF. So if you feel comfortable, analyzing stock charts, taking the trades with what I'm showing, by all means, give it a shot. I really, consider testing it out in sim. Play with it, play with the tools, make sure you understand risk control above all else. But, give it a shot, whatever time frame, whatever instrument you like to trade. If you'd like some help mastering these techniques, I'm launching a new Master Trader course. It starts April 6, 2016. I'll tell you about that in a minute. And I have a stock pick service, so I pick stocks, and we're doing really well. We're making some good money. The people who are subscribing, I give all the details. So a real quick look here. So the new Master Trader course, April 6, 2016, it's in 2 weeks. And you're going to learn to master the tools and techniques I'm using for very consistent profitability. We've got 6 modules. We go through details of Dow theory, trend analysis, indicators, Elliott wave, using them together, risk management. We get deep into that because that matters, how to figure out the right trade size, how to add on to positions. You get my exact written down trade rules for every setup, the reward to risk formulas and method, trade entry, trade management, trade exit, trading business plan, how to track your results, talk about psychology, how to deal with trades that lose, because some do, and advanced scanning techniques, tools, analysis, and how to instantly analyze a chart pattern, not waste times on lousy setups. So launching April 6th, get 4 hours of teaching videos from me, some really good, clear reading material. I keep hearing from students in my other class, my options class, that they think I do a great job of taking complex things and just making them really clear and simple. So that's all written down. You got printable worksheets, email support. You can always email me. You can also set up a one-on-one consultation and talk with me. We'll have 6 weeks of webinars where you can attend live. We'll go through each of the modules training. You can ask questions. We record it. You can watch it. And you get a stock pick every week in the course. I'll give you a stock pick, and profit on just one of those could easily pay for the whole course. How much is the course, Dean? It's list price is $497, but this is a pre-sale. It hasn't even launched yet, so list price $247, pre-sale price $247. If you get in before the start, I got a little tiny URL here. If you download the material, there's a link here you can follow, and I'm going to put the link in the chat area right now. If I can get all the GoToWebinar stuff out of the way. Here is a link for the course. So it's in the chat area. There. Okay. And so I think that's a pretty good deal. There's a lot. People went through my options course. You know, I had them do a SurveyMonkey at the end, and they loved it. They just loved it. And I think the picks we gave during that class absolutely paid. You know, people got their tuition back plus a bunch more. And it has a money-back guarantee. So you get to try the course. You get into the first module and see what it's all about. Go to the first webinar, and I'll give you a full refund if it's not for you. No questions asked, no hard feelings. But if you proceed on from that point, then of course there's no refund. So that's the Master Trader course. Stock picks. So here's my record for the last 3 years and into this year. So I'm beating the indexes. When the market was trending, we were doing really good, 57%, 37%. Market was very difficult last year. We made 28.63. We've already closed 10 trades this year. Last trade we closed was on the 18th, and we're almost 12%. We got a bunch of these mining and gold stocks that we haven't closed yet. When we do, we'll double this. We'll be at 20% already this year. And I use risk management. Of course, there's no guarantee of future, but we've been doing good for years. With the stock pick, you get 1 to 2 picks per week. These are ones I'm buying these with my money in my own account, right? So this isn't abstract for me. I'm putting money on the line along with you if you're following these. I include option contract details if applicable. If you want to trade them by buying the shares or buying calls, buying puts, I provide the detail. Updates every week on the open positions. I record a video and I write text. How's it playing out? What's going on? What's the next move? Where are we going to scale out? We move the stop. I send updates during the week if something changes there. So it's been going really well. The subscribers like it and been successful, and invite you to join. Special offer here. So the list price, if you go to my website, the list price for this is $127 a month, and it's a good value because people are making money. I'll give you a discount down to $97 a month, and I'll let you try it for the first 10 days for $7. So you sign up for $7, 100% money back guarantee, so it's basically for free, right? 10 days, 10 calendar days, sign up for $7. If you want to, get to see 2 weeks worth of picks, you can schedule a one-on-one consultation with me. You can send me emails, ask questions, right? Whatever. And if it's not working out for you, shoot me an email, give me a call. Full guarantee, full refund, no questions asked, no hard feelings. Most people stay because they like it. They're making money. So here's a link for the stock pick trial. Right there, it's in the chat area. Okay, I think that's it. So any last questions? We're right at an hour, and I wanted to keep it up.